Well, welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Shawn Khunkhun, President and CEO for Dolly Varden Silver Corp. Trades on the TSX Venture Exchange with the ticker DV. Hey, Shawn, how you doing today?
I'm doing well. Thanks for having me on.
Hey, thanks for coming back. I think this is sort of our third time. Third time's a charm. Each time your stock's been higher price, which is nice to see. So before we get into all the summer and fall activities, I know you've been super busy. Let's get our 60-second stock pitch out of the way.
Okay.
First question: what is the name and stock ticker for your company?
So the name of the company is Dolly Varden Silver Corporation. We trade in Canada under symbol DV, and we trade in the U.S. under symbol DOLLF.
And what is Dolly Varden's mission and vision?
That's a great question. The idea here is we are trying to grow high-grade silver resources in a safe jurisdiction.
And how many shares are outstanding, and what is your current market cap?
There are 317 million shares issued and outstanding, and the market cap today is roughly $386 million.
What's the insider ownership percentage, and how much capital approximately has been invested by insiders?
So again, we're not founders. We've come in and taken over a company that was existing for about 12 years before this new management took over. So our management consultants, advisors own, I think it's around 4% of the company. But considering, we're a $400 million company, that is a material amount of money for management. And the exact investment, I wouldn't know it off the top of my head. So I couldn't tell you the exact number that's been invested by that team.
Are you fully funded for the next 12 months?
We are fully funded. So the company today, November 5th, has over $34 million in the bank. And we're envisioning and still debating because we're still awaiting drill results. And so we haven't collected all the data and set all the plans, but we're envisioning like a $20 million exploration program. We've got $34 million in the bank, so we are fully funded until 2026.
And what short-term catalyst should investors watch for?
Look, I think investors invest in the company for share price appreciation. And there are things that the company does that can drive that. And there are some external forces that we have no control over that can also drive that. So I really think to answer that question, you got to watch the gold and silver price, because as gold and silver prices have doubled since I took over, a lot of the value that's underpinned on those ounces in the ground is driven by the price of the metal. So I can't ignore that in terms of the impact on the share price. The other thing I would say is, look, we've spent a significant amount of money on drilling over the last number of years. So we've invested into about 32,000 meters of drilling this year. We've got a lot of results still pending. We just had some incredible results out yesterday. And so more drill results, but this is a company that's grown not just through discovery and not just through exploration, but also through acquisitions. So, that may be part of our future as well, to continue to leverage our market cap and our ability to negotiate good transactions for our shareholders. So catalysts to come, drill results, potential M&A, and it doesn't hurt when the silver price has gone up 40% in the last 12 months.
Hey, excellent. Thanks very much for answering those. Now we can get into our regularly scheduled programming. So when we last chatted, I think it was sort of towards the end of April, you guys were just about to sort of start on a busy sort of summer exploration season. How did summer exploration and sort of fall exploration season go for you?
So look, when we started planning for the year, we envisioned a 25,000 meter drill program. This was a year in the Golden Triangle where it was an exceptionally light year in terms of snow. And so where we are at the southern tip of the Golden Triangle set in a valley, we didn't get a lot of snow. So we were actually up at site this year in February. We had drills turning in May, which I believe is the earliest ever that the company started a drill program. So we started early. So we started reporting results early. Now, I would identify or categorize the drill program with three main objectives. Objective number one was to grow mineralization outside of the resource. So try to find new veins. And so we hit two new veins that we're building upon that are not in the resource estimate. So the Moose vein, the Chance vein. So we were successful in bucket number one, which was regional exploration discoveries. Number two, we wanted to go into Wolf, and we wanted to continue to grow high grade primary silver. And so, Kier, if you go back to August, September, we had three result oriented press releases where we were highlighting 1,000 grams of silver over 9 meters, 600 grams of silver over 20 meters, 500 grams of silver over 29 meters. And so Wolf is, as we drill it, it's starting to swell. So it's starting to really broaden out. And as we continue to drill, it's starting to intensify. And the grades that were 200, 300 grams at surface are now going 4, 5, and 1,000 grams per ton. So Wolf it's exceeding our expectations. These new discoveries like Moose and Chance further the narrative that there's a lot more silver and gold to find on the property. But yesterday's news at Homestake, where we highlighted two big holes. And these holes, there's a couple of different ways to look at them. So if we took the broad mineralized envelopes, we've got one area that's 50 meters of almost 9 grams of gold. And then the other one, 60 meters away, was 100 meters of over 4.5 grams of gold. So you got these broad mineralized areas. Now, that's not how we interpret they're going to be mined. So the way we presented the data was, 13 meters of almost 30 grams of gold and over 30 meters of 12 grams of gold. So we were focused on what we think will be mined, which is still, we believe, amenable to bulk mining, so low-cost mining. And these are really, really, really impressive intercepts, and some of the best that we've ever had from project. So again, this is the fourth year. So 2022, the best drill results in the Golden Triangle came out of Dolly Varden. Same thing happened in 23. We stole the show in the first half of 24, and it looks like that is continuing. And we've got some steep competition with SK, with Bruce Jack, and with Premier.
Fantastic. Well, thanks for sort of walking us through that. Kind of maybe for a little bit of some of my viewers who might not be completely familiar with Dolly Varden, you mentioned a few targets like Homestake and Wolf. Maybe you could just sort of reiterate kind of the main sort of target zones and kind of where they're kind of located within this Kitsault Valley Trend.
So I want to go a step further. So I want you to kind of step back. Northwest BC, you've got the Golden Triangle. You've got an area that has discovered 155 million ounces of gold, 1.2 billion ounces of silver, and a lot of copper. Dolly Varden is at the southern end. And we've got the past producing Dolly Varden silver mine, which was the richest mine in the British Empire when it was in production. We've got the Torbert mine, where it was Canada's third largest silver mine. So we've got these two past producing deposits, okay? What we've done is we've included two more deposits into a compliant resource estimate at the Dolly Varden property. Then we acquired Homestake, which is a few kilometers to the north, which is a silver gold system and a gold dominant system. So if we took this Kitsault Valley, which is 15 kilometers south to north, we've got a combined 64 million ounces of silver and 1 million ounces of gold in a compliant resource estimate. Okay. That's the equivalent of about 150 million ounces of silver equivalent. And the strategy is there's two main centers of gravity, the Dolly and the Homestake. And we're focused. We did 16,000 meters of drilling at each site. a total of 32,000, and we view them as one system. And so the unanswered questions that we're setting to answer is, can we further expand the known deposits? Can we find new ones? Can we show that they're connected into one system? And so that's what we're setting out to do. And so when you hear me describe Homestake or Wolf, these are deposits that are set in this trend.
Excellent. Thanks very much for kind of covering that. And so you were originally scheduled, I think, to do about 25,000 meters of drilling, if I'm not mistaken. I guess with it being a bit of an earlier season getting started, having a bit of luck there with securing some additional capital, you expanded it a little bit. What have you reported on so far?
That's a good question. So I think we've drilled something like 69 holes for just under 32,000 meters. And we've got a significant, we've got a couple dozen holes that are still pending. So lots of information to still get out to market.
And are you guys now complete in terms of the active drilling for this season?
Yes, we are. So we're now moving into reporting time, and I envision the company putting out assays. We just had some assays out yesterday, and continuing to report right through till January.
Excellent. And since you touched on having these 43101 resource compliant deposits, when's the last time you guys sort of updated your a mineral resource estimate, and how much drilling has been done sort of since?
So technically, the date on our last resource estimate was Q1 of 2023. So that we've done a fair bit of drilling that doesn't incorporate those estimates. So I think there's something like over 100,000 meters of drilling post resource estimate. So those numbers potentially could be understated. There has been some growth outside of the existing resource. So that is a very good point that you've highlighted.
Yeah, do you think there's been sort of enough drill data to warrant having a review to see if it might make sense to update mineral resource estimate, maybe move more ounces from like an inferred into an indicated and such?
Yeah, you know what? We're having those conversations internally right now, and what we think may be appropriate is to get one more season of drilling under our belts before coming out with some new numbers.
Excellent. Thanks for sharing that. Out of the sort of exploration season that you started early, you had nice weather, drilled a little bit more. Any sort of notable sort of accomplishments that you're especially proud of?
I think for me, the highlights are coming into areas that we had very little data on. And like these are all just ideas that we're trying to validate, right? So one of the ideas is you've got a trend, and cross-cutting to that main trend every 1,400 meters is the potential for another deposit. And so we went up and these are big step outs, So from the Torbrit, you go 1,400 meters to Wolf, and then 1,400 meters to Moose, and then 1,400 meters to Chance. And you're taking what is the diameter of a Canadian toonie, right? And you're on a project that's vast in terms of size. And to go in and to hone in, there's either two things that are happening. Either number one, our geos are the best in the world, or number two, this is a very rich property that hosts a lot of mineralization. So number one, I celebrate the validating of the periodicity, our understanding not only every 1,400 kilometers 1,400 meters, 1.4 kilometers, is there another deposit or potential deposit, but understanding how they're plunging, the dip, the geometry, and nailing it is a huge accomplishment. To do it on time, on budget, safely, that's important. So I celebrate that. Going into this Wolf deposit, and for Wolf to open up and to get twice the grade, that's exceptional. But I don't know how you beat the results we just put out yesterday. I said that a few years ago, and the team that I have around me is just they're innovative. They started directional drilling this year, Kier. So what they did is at Moose, some of the holes were hundreds of meters deep, and in order to save our shareholders money, what they did is they employed a method where they drilled sort of a mother hole, and then they didn't have to drill down that initial meterage. So let's say it was 100 meters, in some cases 200 meters, and then they drilled what are known as these daughter holes to fan out and so they saved. So I factored on the initial 25,000 meter drill program that we had budgeted and scheduled, we saved about $1.6 million with the directional drilling. And so I just got to, that's something I celebrate. So look, the team is doing a phenomenal job. They're constantly challenging themselves. They're constantly looking for efficiencies, and then look, we're very, very lucky to have such a highly prospective project. We get a lot of support from the Nisga'a, who are our Indigenous partners, who the project is hosted in their traditional territory. We provide employment opportunities for the Nisga'a, but without their support, there is no project. And so there's, BC government's been phenomenal. There's a lot of things that are working here, and the most important, I think, right now for investors is the fact that silver, in my opinion, and I've been studying this stuff professionally for 21 years, has gone from being uneconomic to mine to economic. And a lot of people say, well, what do you mean by that? Well, the reality is there are really no silver companies. These silver companies, because the price was so depressed for so long, had to go and mine other metals. And so there is no pure silver play. There may be one. And everybody else has got byproduct metals. And, what I celebrate is we're now moving into a price environment where it is not only extremely profitable to mine silver, it's incentivizing development of silver, and it's starting to incentivize exploration of silver. And so I'm very bullish on silver, I think, and we've got something unique in that we're in a safe jurisdiction and we've got high grades.
So you kind of touched on saving shareholders money, but you've also been able to ring the cash register here. You closed on a over $32 million bought deal financing here recently. Could you walk us through a little bit about that? Who participated, how it was structured?
So listen, again, it takes a village to raise a junior mining company, and our village includes Aventis Research, Haywood, and Raymond James. And, Dolly Varden executed $47 million in financings this year. And in the history of the company, since I've run it, we have not done a down round. And that's saying something in an environment that was pretty difficult up until the spring. So I got to thank the Sprott organization, Eric Sprott, Sprott Asset Management, but there's been a number of institutions, some I can name, some I can't, including corporates over the last 12 months, like Hecla, that have been very supportive to the company. And without those shareholders, and there's too many high net worth and retail shareholders to name here, but really without their support, none of this gets launched. So, look, people are celebrating the prospectivity, the grade, the team. I'm honored to have the privilege to now arm the team with the capital to go out and try to hit these targets and try to grow this mineral inventory.
With the new injection of capital and the cash reserves, how far out do you think you'd be funded, and what sort of work do you hope to accomplish?
If plans stay the same, we're good till 2026, and that was deliberate. Look, I studied silver 100 years ago. Only 10% of silver was used for things outside of jewelry and investment. Today, that number is 55%. I think we're coming into a silver crunch. Some call it a silver squeeze. I think that's happening by the end of next year. I think you're going to see record high prices, but Dolly Varden doesn't need to print a share. So if we incentivize investors to want to own our securities, there's only one way they're going to be able to do that, and that's in the open market. Now, listen, things may change if the share price gets to a place and if our plans are modified and there is the right type of investor, we may look at doing something, but based on existing plans, based on existing market fundamentals, we're funded till 2026.
You kind of touched on it a little bit on the macro environment. What's your crystal ball sort of look like into the future? You're obviously very bullish, big proponent of silver, but maybe you could just, any further thoughts sort of on the macro theme you might want to share?
Yeah, listen, I look at what's happening in the world, and there's so many reasons that gold and silver are relevant today. And one of those reasons is the U.S. dollar is losing its hegemony, and this is a trend that started when I got into the industry, when almost 3 out of every $4 that made up foreign reserves were U.S. So we've gone from 72% of global reserves being denominated in dollars down to 58%. So with a 14% reduction, we've seen the gold price go up 10 times. And so what we're witnessing, in my opinion, is a new global monetary system unfolding. And it doesn't happen overnight, but as we move into that new global monetary system, and then there's a number of other factors. You've got debt, big debt, historic debt. It's never been bigger, and the interest on the debt is accumulating at a rate of $3 billion a day just for the U.S. And so the silver mining industry as a whole is valued at $37 billion if we took the top 13 producers. So every 13 days, the interest on the debt is the equivalent of the entire silver mining industry. So in a structural and systemic situation with those fundamentals, where could the silver price go? It's an infinite number. And then you factor in solar, EVs, the fact that consumers in places like India and China are getting priced out of gold, so they're going and they're buying silver jewelry and they're buying silver for investment, where for thousands of years they only went to gold. So I look at all these fundamentals and I look at, are the challenges that took gold from 200 to 2000, have they been solved? And the answer is no. So what does my crystal ball say? My crystal ball says, cling to hard assets, cling to them, and that'll protect you, because the unit of measurement is perverse because of the way it's, debt is being created, and we're not, we have an election that's happening in the U.S. today that the world is watching. And the reality is neither side of the political spectrum is addressing the issues at hand. And so until those issues get addressed, I am going to be uber bullish on real hard assets. And my go-to hard assets are gold and silver. And most people don't understand silver's role as a monetary metal, as money for 5,000 years, nor do they appreciate from a mining perspective, we're only mining 800 million ounces a year, and there's demand for 50% more of that, and we're only recycling 150 million ounces a year, so the whole market is sub a billion. And it's a tiny, tiny, tiny market. And, so I can go on for days here, but listen, I'm wildly bullish on silver. And I think the price is going into the triple digits. And, this might all sound crazy to some of your viewers, but again, just think about your purchasing power. Think about it in vegetables, or think about it in liters of or gallons of gasoline. Think about it in something where if you go back a few years, and you don't have to go back far, because the amount of printing that came out of the pandemic is really where, I thought what we printed during the great financial crisis was significant until the last, until 4 years ago. So, the difference between the GFC printing and the COVID printing is it went more direct to consumer. The first crisis was a crisis where they shored up the financial institutions, so the velocity of money did not really pick up. That money did not go to the consumer, so you didn't really see the inflation as much, but it's more pronounced. And now that money's there in the system, it's losing its purchasing power.
Hey, excellent. Well said. Thank you for your input there. So it's a competitive market for precious metal sector for juniors like Dolly Varden. You mentioned a couple of names off the top that you're in some good company in terms of grade and whatnot. But what sort of differentiates Dolly? Why should people look at Dolly specifically if they want to play the silver space?
Listen, I actually think it's a function of scarcity. Unfortunately for the investing public, there just isn't that many names available. Like gold is not rare. I could name you 170 gold deposits in North America alone that have a minimum of 750,000 ounces of gold. But if you look at silver, there are only 33 deposits that have north of 25 million ounces. So why Dolly Varden is unique is it has both the silver and the gold. So it differentiates itself from its peers because it's one of only 14 projects that have both the silver and the gold in a minimum of that endowment. But what really separates it and what makes it number one, in my opinion, is the grade. We're 500% higher in grade than the peer group, right? So you take the silver, you take the 14 peers, and you look at our grades, and that's what differentiates us. And then if I can go a step further and argue that I would rather be on a project that's in my time zone, in my currency, in my backyard that I can drive to, fly to, sail to, that's in stable Canada, where there is the rule of law, there are benefit agreements with First Nations, there are modern treaties that are signed, there are mining operations like Newmont's got the Brucejack, and there are others coming. And so these things, look, I when I first saw Dolly Varden, I saw it as a call option on Hecla. Hecla was the go-to fastest growing established silver miner. Dolly, to me, was trading at pennies. It was a call option on Hecla. And I think a lot of U.S. investors saw it the same way. What it is now, based on a few moves in the area, a few regional consolidation moves, a few discoveries, it's now becoming a project that's got $4 billion worth of metal in the ground and growing. So it's becoming a real threat. And it's got a market cap that represents 1% of that in situ value. That's attractive. So I think if you want to get exposure to precious metals, go buy some physical. If you want to speculate, buy equities. And to me, Dolly Varden represents a company that, if you're serious about pipeline projects and future resources, it's one that is on investors' radars.
So maybe you could just educate us a little bit. You're well in tune. You're in the industry. You're in the sector. You work with some great people. What's sort of like in vogue? what's it going to take to get sort of, more M&A sort of happening in the space? What's sort of the kind of threshold that, majors, what's sort of the threshold for kind of a tier one sort of silver project that somebody would acquire so they could go and develop it?
It's,
Can you give us a little bit of like what your thoughts are there?
yeah, and again, these are just my opinions and my biases based on my experience. But studying M&A cycles, I think the flurry of M&A comes towards the end of a cycle. And so, where I think we are right now in silver is the producers are getting together. This is something that we saw in gold a few years ago when the big gold miners came together, starting with Rand Gold and Barrick, Gold Corp and Newmont. And so that happened years ago. I don't have it in my calendar, but probably 7 years ago in gold. And what we're starting to see now with Silvercrest and Coeur, Gateau, and First Majestic, we're starting to see the big companies come together. And I think, you may see more producer M&A initially. And then what'll happen is the next stage of companies will be the unfunded developer stage. So then they'll come down to projects that have a lot of resources that are maybe they're permitted, they're just unfunded developers. And then you'll go down to advanced exploration companies. And then you'll go further down a foot to even earlier stage opportunities. But so where I think we are is we're in that initial producer to producer stage. And it's really hard for me because silver is very different than gold. What would take gold a year to accomplish, silver can accomplish in a week. So trying to put a calendar on how this all plays out is difficult. There's so many factors that are going to play into this, but and then every company is different. There are companies in the market that have been making investments and taking positions in smaller entities throughout the market. So, every company's strategy is different. Some are not interested in investing in a company, taking a toehold, and watching that company de-risk an asset. Others are. So I think it's company to company, it's board to board. But what I'm seeing here, whether it's on the investor side or the corporate side, the pressure is starting to come in. The pressure of growth being we're moving from fear into greed. It's slow, but that initial move has started. And, I think the big theme for the industry is going to be growth.
Excellent. Maybe to wrap up, what should investors sort of take away from this update? What would you like them to sort of like? What would the key takeaways be?
I'm always rooting for the buyer, right? So I want I want them to make money. And I think, one of the things to watch out for is look, we've had a historic move in the gold price. And if you study the market, there's only been a few times in history where gold has performed better than it did in 2024. And so, look, if you're new to this, maybe the approach to take is, and you're keen to invest for all the fundamental reasons that you and I are here, maybe the approach to take is like a to dollar cost average, to maybe to just put your toe in the water here. And I always feel like my experience in the gold business is it's always given you a chance to come into it. 2 steps forward, 1 step back, the whole way through. So I always like to try to buy things at the 50-day moving average, at the 75-day moving average, at the 200-day moving average. And so I would really celebrate investors understanding and appreciating that a year ago, gold was $1,000 an ounce lower than it is today. And so be very, very careful and really understand your own psychology when it comes to investing and, talk to a professional, follow the pros, follow the Rick rules, and be prepared to devote the time to read the financial statements, to get to know the management teams, to understand the vision, understand the alignment. There's a lot here. It is one of the most difficult industries in the world, and that is why it is one of the most lucrative. And so really understanding all that is important, and it's a lot, and it should be trusted to professionals. So if you want to play, one way to do it is buy an ETF, buy SIL, SILJ. It'll give you exposure to a basket of companies. Start with some physical, buy a royalty company, buy a big producer. But if you want to speculate, that's a whole other conversation. And that's what you're doing. You're speculating and you're looking for growth.
Excellent. Any final thoughts you'd like to wrap up with?
No, I think we've covered a lot of ground here.
Yeah, excellent. Well, we look forward to seeing sort of the balance of the, I guess, last sort of 24 sort of drill holes to kind of come out over the next couple of months, and look forward to catching up with you before PDAC next year. Have a great last couple of months here of the year, and thanks for your time, Shawn.
Thanks again for having me on.